Welcome back. You're watching Trading Day. Let's quickly pull up an ICICI Bank and then an ONGC because these are the two counters which are yet to report earnings. You have ICICI Bank, which is pretty much on the borderline as we speak, and you have an ONGC as well that will be in focus in terms of where earnings are concerned. Let's see what an ONGC is doing as we speak, because that's going to be another focus area. There you go, marginal gains of around 0.3% coming in there. In fact, let's decode the earnings, because in terms of where ICICI is concerned, that is expected to post Q1 earnings as we know, and all eyes are going to be in terms of the asset quality as well as loan growth go. Now, we are expecting some bit of moderation to come in there. Pranoy Banerjee standing with us with a complete breakdown. Pranoy, what's the key expectation? I mean, what are we going to actually watch out for?
Well, the provisions are to be watched out for, because in terms of exposure to the key NCLT accounts, if the bank reveals some details about that, that will be important. And what's the provision number? The profit number is varying in terms of the street estimates, so there are wide variations as far as that goes. If you take a look at the net interest income, that is seen higher by 10 to 11%. The net interest margins are seen close to 3.5%. However, this time around also there is some kind of pressure that is also seen from elevated provisioning levels, as I said, and also what the asset quality is in terms of incremental slippages. How much of that comes through? Because the fresh slippages number will be important. How much of that is within the already notified watch list, and how much of that is outside the watch list, because that was one of the concerns with Axis Bank as well. And more importantly, the cases that are to be referred to NCLT, what is the kind of exposure ICICI Bank has to those. So obviously the watch list becomes important in that regard. Other numbers, the loan growth more importantly is expected to moderate in a range of between 5 to 7%. Sluggish loan growth is what is seen, while retail is seen growing by 18 to 20%. So we'll watch out for those key numbers. But probably it could be a little subdued in terms of profitability. But in terms of net interest income, a moderate rise of 10 to 11% is expected.
Right, so all eyes will be in terms of a provisioning as well as asset quality are concerned. Pranoy, stay with us. We have been joined by Rajesh Palviya, Head of Research, Technical and Derivatives at Axis Securities. Rajesh, in terms of where ICICI Bank is concerned, currently the stock has been trading under pressure. Again, in terms of fundamentally, eyes will be in terms of a provisioning as well as asset quality go. What's your expectation technically? Where do you see ICICI moving from here on?
Yeah, if we look at the near-term chart of the ICICI Bank, it has given the clear breakout about 300 level, and it's not sustaining above that breakout level. So looking at the chart, we expect that ICICI Bank can move further from these level, and on the higher side it may test the level of 330 or 345 on the higher side. So if any kind of decline comes in the ICICI Bank post result or something, then one can buy ICICI Bank around 300 level. One can keep a stop loss of 290 for their long position. If you look at the longer term time frame of ICICI Bank, it has if you look at the last 2-year move of the ICICI Bank, it has again retested. It is moving towards its again higher level of 350 on the long term chart. So long term trend is positive for the ICICI Bank. Even on the near term basis, the trend is positive for the ICICI Bank.
Right. In fact, stay with us. We'll just go to Pranoy in terms of our ONGC is concerned. Let's quickly pull up an ONGC and see overall in terms of our ONGC goes. It's a stable quarter that is expected, and realizations will be something that we will be watching out for. The stock is seeing marginal gains to the tune of 0.3%. Pranoy, if you could just decode ONGC for us as well.
Well, yes, so let's go through the headline numbers first. The net sales is seen higher by 11%, and if we take a look at the EBITDA, is seen expanding by, the margin is seen expanding by around 60 basis points. 48% is where the estimate is. The EBITDA is seen at 9547 crores. But more importantly, a few numbers that are critical when we track ONGC. One is the net realization number that is seen at close to a little over $49 per barrel. This was around $46 per barrel, 46.1 to be precise for the year ago quarter, and this was for their nominated fields. So that kind of an up move is expected, because year on year crude has seen a marginal uptick, but sequentially it's expected to be a little weaker. But the estimate hovers around $49 per barrel, because mind you, crude at one point in the last quarter had also gone up to as high as $57 or $58 per barrel, after which we've seen some kind of a cool off. Gas has been the painful area for ONGC because the production from there has been low, and also the gas price realizations are not helping. I mean, it has made its submissions to the government for a floor to the gas prices, but those gas prices have been weak weaker. Even in the recent revision, there was a very marginal uptick that came through. There's expected to be a decrease in other income in comparison to the last quarter, so watch out for that. But most importantly, it'll be the net realizations as well as the gas production and production of its nominated fields, which will be watched out for. From their own fields, it is seen higher, the production 5.8% on a sequential basis to 6.4 million tons. And this compares with around 5.16 million ton in the year ago quarter. So oil production is also seen rising reasonably. The oil production is likely to expected to increase from nominated fields like the Vasai East, the Ratna and the R series also, but mostly a stable quarter on a year-on-year basis.
Mostly a stable quarter expected on a year-on-year basis. Thanks for that analysis, Pranoy. Rajesh, talking about ONGC, of course, this one has been in the news of late because of that HPCL merger as well. So let's get a chart check both on an ONGC as well as an HPCL. What do you recommend?
Yeah, if I look at the ONGC is in lower top, lower bottom formation, and it is showing the weakness on the near term as well as on the short term chart. So there is no as such strength looking at on the ONGC chart. So even if it's moved further higher from these levels, so 180 would act as a major hurdle for the ONGC until unless stocks not manages to cross 180 level, it will not regain the strength on the near term as well as on the short term chart. Lower side 154 is the major support area for ONGC for any kind of corrective actions comes from these level. So if it's break 154 level, then we may see further more downside in the ONGC and it can test the level of 140. So on the higher side 180 is likely to act as a major hurdle for ONGC for any kind of pullback action.
All right, let's talk about another stock that is posting its earnings today, and that's an Idea. Watching out for those numbers. Remember, geo disruption continues in the telecom space. So Bharti Airtel reporting a 75% decline in profits on a YOY basis. Idea, the loss could widen this time around. That's what the expectation is. Let's head across to Piyush, who's standing by with a preview of those Idea earnings. Piyush.
Given the fact that stock actually has run up 12% in the July month and post Bharti Airtel positive surprise on the results, the stock basically has started cooling off, and that tells you that the 90 to 100 rupees mark perhaps is what actually traders are seeing as a very high resistance level to cross. So keep that in mind when you're going to assess the results, because expectations are now that most likely Idea should be outperforming on EBITDA margins the way Airtel has done. So let's have a look at the numbers here. EBITDA margin seen basically at 24.1%. That should be a drop of 3.8% versus the consensus expectations. I would doubt now that Idea perhaps could be outperforming these estimates, because Bharti Airtel India wireless business has been able to do that. Now, in terms of net losses, that is expected to increase to 689 crores, and that would be like a huge increase versus a 328 crore loss versus the last quarter. Again, the impact would be increase in interest costs and depreciation on the financials for Idea. Now, what would be important is that what sort of voice estimate trends and the data trends would be. The estimates for ARPU are that a fall of 5% to 135. Remember, Bharti Airtel posted an ARPU of 154. The expectation was 152. So there was a positive surprise element on ARPU also. So perhaps can Idea do that? I think if Idea is actually able to do that, then that will be taken positively. Very quickly on the voice and data, again the revenues are expected to be down by roughly between 0 and 4% for voice. For data, 5 to 9%. I would say on data, Idea can surprise positively. Lastly, what should we watch after the results? In the management commentary also, FY18 capex guidance, because Jio has been ramping up. If Idea actually increases that will be taken as negatively. Secondly would be what sort of update should be coming from management on the Jio impact, the feature phone, and everything which is happening in the system right now. And the third would be the new circles which have been showing improvement in profitability over the last 2 quarters. What is happening there? And lastly, I think, what is the churn rate? Last quarter we talked about churn rate was very high for Idea. So if the churn rate goes up further, that could be a cause of concern. All in all, expectation now after Airtel is chance of positive surprise are much brighter.
Chance of a positive surprise much brighter, and maybe that's why you've seen that stock run up in the last few sessions. A little weak today, but it has had a strong run in the last few sessions. Rajesh, how are you looking at Idea? Technically, do you see more upside on this one? Lately it's been buzzing.
Yeah, at the current market price, idea is hovering at its important support area of 93, which is very important for today's trade for idea. If stock manages to hold this 93 level, then we might see further upside towards 100 and 105 in the short-term basis. However, on the lower side, 85 is likely to act as a support area for any kind of corrective action in the idea at the current juncture. So 93 is the critical level for idea for today's trade. So we have to watch whether the stock holds this 93 level or not.
93 is a critical level to watch out for on an idea. Thanks for that, Rajesh. Let's take a very short break. We'll be back with lots more, talk about more buzzing stocks with Rajesh. Also look at HDFC and Max Life. Is the merger off the table for good? We'll get you an analysis. Welcome back. You're tuned into Trading Day. HDFC Twins have been in top form all day today, in fact contributing significantly to the market up move. But what we are picking up is that the three-way merger involving HDFC Life, Max Financial Services and Max Life Insurance, which was proposed in June last year, seems to be off the table if Deepak Parikh's hints are anything to go by. Let's in fact listen into what Deepak Parikh had to say at the HDFC AGM.
There was a section 35 of the Insurance Act which says that a life insurance company can only merge with another insurance company. However, the legal view taken by our advisors, our legal advisors, was that since it's one composite deal, it is one deal at the same time, because Max Life wanted to merge first with Max Finance, which is the listed company, and simultaneously merge it with HDFC Life. It is one plan, it is one deal, it is one comprehensive deal. And we would get the permission of IRDA. Now, IRDA referred it to the government, and the Solicitor General took a view that it loses its insurance. Max Life loses its insurance status when it merges with the Max Finance company, and therefore it is against the laws of the section, against 35 Insurance Act. And therefore our proposal was rejected. But it took a long time. We spent 1 year. 1 year is gone because it took a number of time. We represented, again they went, but ultimately we got a no from them. And at that stage our board decided, insurance board decided, both Standard Life and us, that let us move ahead with the IPO process.
All right, Piyush Jain joining in with more analysis on this. Piyush, effectively the hint coming in that the merger may be off the table. Is that what you're picking up as well?
Absolutely. So what we understand from our sources that 28th July when the Max Life board is going to meet, again what actually would be important is that while quarterly results would be on the agenda, but then 31st July is the date when actually the exclusivity period between the HDFC Life and Max Life is set to expire. So what we are understanding that perhaps formally actually the merger might be off for some time now, because let's remember both companies were keen on deal, but there actually are many stumbling blocks. And also because HDFC Life has already gone ahead with the IPO, it implies that for some time there cannot be actually major new development, and which also means that perhaps till the time Max actually doesn't come with a new structure for the deal, there could be actually a long time before any sort of new structure or new deal could emerge. So perhaps that's what actually Mr. Parikh was indicating, that while they actually have gone ahead and also submitted a prospectus for HDFC Life IPO, which over the last 1 year actually they had stopped. They actually were looking towards an automatic listing through Max Life, but now it appears that yes, for some time, because the exclusivity period is going to expire by 31st July, it is appearing very clear that the talks, the formal merger process, perhaps now is actually off the track.
Right, the merger may be off the track. Piyush, I don't know how much of this is in fact contributing to the up move in HDFC, but do you feel that in part is also fueling this drive, that maybe this merger is not going to happen now?
So I would say from an interesting angle here is that while we know that HDFC Bank, HDFC, they actually continue to trade at premium multiples. HDFC Bank in fact is one of the most richly valued bank right now in the Indian banking sector. So from that point of view, in terms of the legacy the group commands in terms of valuation multiples, as and when HDFC Life gets listed, and if the valuation multiples are towards the higher end, the way HDFC Bank, HDFC, they command in the market, who knows, that could be good news for HDFC Group, because then again the valuation multiple difference will come. Perhaps if a new structure emerges at some point in the distant future, it could be actually a much more lucrative offering for HDFC shareholders. So yeah, with that hope, perhaps that's one point. But then I would say in a larger picture, HDFC Life basically is going to trigger value unlocking, and the way insurance valuations have been increasing, and also the way premium basically those actually are growing month after month. I think all that basically is getting factored in the HDFC valuation, and what brokerages are coming out with the notes is actually painting all that with a good positive commentary, good positive notes, and also at some target price increases.
Fair point, Piyush. Thanks for that analysis. Rajesh, on the charts, HDFC, it's 5.5% of an up move coming today. On a YTD basis, also the stock has gained in excess of 35%. Would you advise entering fresh longs at this point?
Yeah, looking at the charts are looking quite strong on the HDFC, and the volume action is also encouraging on the breakout which we have got on the daily chart on the today's trading session. So 1680 is the support area for any kind of corrective action comes in after this run up. So one can remain long in the stock, keep stop loss of 1680, and on the higher side the pattern suggests that it may scale up towards the 1760 or 1780 level in the coming trading session.
Rajesh, hold on to your thoughts. Let's take that final break. We'll be back with more stocks to analyze on the other side. Also bring in Rajesh Gupta of SBI Caps to get a fundamental picture on the markets.
Dealing Room.
Welcome back. You're tuned into the trading day. Also joining us now, Rajesh Gupta, AVP Research at SBI Cap Securities. We also already have Rajesh Palviya with us. So gentlemen, I apologize in advance if I do get the names wrong in between. But let me go to Rajesh Gupta first and get his view of the markets. How are you seeing the markets right now, Rajesh? It's been a spectacular July series. You've scaled at 10,000 mark. The Bank Nifty has gone above 25,000. And on the earnings front, we haven't seen any big disappointment so far, at least. Do you feel that this momentum is only going to continue going forward from here, or would you advise caution at these overheated levels?
Hi Dipanshu. So if you look at the market in the recent rise that we saw from 9,000 to 10,000 plus now at present, I think mainly there are so many triggers which is basically firing together and taking this market to a particular level. And one is of course the very high inflow of cash, that is liquidity, from both DI and FIIs. In fact, DI has outpaced the FIIs inflow in last 1 year. So close to 1 lakh crore rupees of investment made by these two put together in last 9 months or so. So I think these are the one thing which is basically driving the market. Result season, yes, of course, you're right. There's been not been very significant disappointment so far. I think if I carefully analyze some of the sample data from companies who declared the results so far, I think what we have seen is that something like a double-digit or high double-digit growth in the their top line, and the margin has been improved on as compared to last 1 year. So it clearly suggests that things are improving for the entire, let's say, economy. At the same time, the monsoon is another trigger which I think is basically playing out. It has been good rain so far, and of course, with the low inflation, there is a strong expectation building up in the market that there could be a possibility of rate cut. So if I put it all these data all together, then the market believes that perhaps we are basically facing more positive than the negative. So I think the momentum likely to maintain the near future, and one has to remain invested in the market for near term. though they have to tone down the expectation as per the return is concerned, but I think double-digit return is not ruled out in the near term.
All right, maybe some kind of a correction is not to be ruled out in the near term. Incidentally, markets are beginning to lose momentum, so we've moved into the red as far as the Nifty goes. You're heading back towards 10,000. So maybe some bit of profit taking coming in at these high levels. We'll have to wait and watch if the July series, in fact, expires at that 10,000 mark or manages to hold that 10,000 mark or not. Banks also coming under a bit of pressure, but nonetheless holding on to gains at around 24,876 on the Bank Nifty. Pull up an ICICI Bank ahead of earnings, some kind of weakness coming in over there, down about almost 1.5% right now. So that's seeing a fall at the moment as well. We will of course be covering those results in detail for you. Incidentally, pull up a Yes Bank as well. This is the stock of the day as far as we are concerned. 4% of an up move coming in. Brokerage is absolutely bullish on this counter going forward from here. Most of them recommending a hike in the target as well. Piyush has been analyzing some of those reports that brokerages have given out on a Yes Bank. Let's get him in to talk about that. Piyush, Yes Bank, the street extremely bullish on those numbers, and now they're seeing significant traction on the stock going forward from here as well. What are brokerages making of it?
Well, the vote of confidence has been coming from most of the brokerages, and one of the common themes has been that they actually are happy with asset quality, and also what we are seeing is that there has been like the target increases. It is actually common across all brokerages. Let's start with Morgan Stanley first. The rating has been maintained at overweight, and then the target price has been raised to 2,000 rupees versus 1680. So again, that's basically a substantial material premium to what the current market price is. Now what they are saying is that the impaired loan ratio was only 2.2% in this quarter. So again, which means that there was actually no major deterioration in the asset quality. And what they are saying is that Yes Bank actually showing improving liability profile with the saving account ratio increasing to 25% now. Also, no major new restructuring, no refinancing, no S4A, and the capital ratio surprised positively, which actually has given them a vote of confidence. Also, they're saying that the loan growth has been strong, retail franchise is improving, and again that actually should lead to good outperformance. Now, the second one, Deutsche Bank, again target price has been raised to 1920 from 1700 rupees. And again, apart from the asset quality improvement comments, what they're saying is that the perception of the bank should now improve because of increasing share of retail and more comfortable asset quality. And they believe that the CASA growth and retail loan growth is much ahead of its peers. The third one is Credit Suisse on Yes Bank. Again, the target price has been raised to 1653 versus 1474. So you can say amongst all, basically Credit Suisse is the one which has a conservative target here. Now they're saying the results were in line with estimates, and the pace of loan growth is actually strong both in corporate and retail segments. So again, they have similar sort of view on the improving asset quality. And the fourth one is actually Motilal Oswal on the Yes Bank. Again, similar sort of target 2123 and similar sort of positivity on the asset quality. Overall, if I summarize everything, brokerages are saying asset quality was very strong. Loan growth in both corporate and retail was very strong. At present, Yes Bank basically is showing performance which is ahead of the system.
Yes, Bank is showing performance which is ahead of the system. Rajesh Gupta, let me come back to you on a Yes Bank specifically when you talk of private banks. Of course, it has a bigger share of the retail book, but it's not immune to the corporate book concerns of an ICICI or an Axis. But nonetheless, this one has been able to keep its asset quality stable. It's performed well, and again, it's outperformed the other stocks as far as private banks go. How are you looking at a Yes Bank? And consequently, how are you looking at an ICICI and an Axis Bank as well?
So I think, I mean, if you look at the entire BFSI space, then probably we are more positive on the private sector bank, and Yes Bank is one of them. What we have seen is that the retail book is growing very fast, and the asset quality in the retail book is very, very stable. Apart from that, when we look at the entire SME and the MSME, for example, corporate lending is now slowing down. Most of the bankers, especially in the private space, are finding very, let's say, some kind of arrangement in terms of lending through to a good corporated and subscribing their non-convertible debentures, for example, or the bonds. So I think the growth in the credit side, yes, there have been slowdown, but I think most of these, even for example, HDFC Bank or Yes Bank, both of them may be able to maintain their asset quality near 0.5% or so. So I think it's a very positive sign, and we believe that these two banks, HDFC and Yes Bank, is basically a good investment option for the investors. Apart from the private sector bank side, we also believe that some of the beaten down microfinance company like Ujjivan, I think is currently available less than 3 times on price to book side in FY19 book value per share. So I think that company also looking very attractive. Yes, there could be some kind of lower number in terms of profit because of the higher cost to income ratio, but I think the valuation is very, very compelling. So I think private sector bank, the two banks that I mentioned, apart from that, we also believe that Ujjivan Finance is also a good investment option.
Right. So maybe you look at some of the NBFCs as well in the space when you're looking at financials. Rajesh, Palviya, how are you looking at Yes Bank in particular? A strong move coming in. Last 2 days, I believe it's gone up by about 10%. What do you recommend on the charts of Yes Bank?
Yeah, amongst all the private banks, the Yes Bank is the outperformer. It has gained around 21% in this current month, and on the week-on-week basis, it's gaining around 13%. So looking at the chart, it has given a decisive breakout above 1650 level on all monthly chart as well as on the weekly chart. So the chart patterns are bullish as it's trading across all the time. It's trading on the bullish territory on across all the time frame. So looking at the move which we have seen in the recent past, some cool-off action can be anticipated in the Yes Bank in the near term. But again, if stock comes near to 1720 or 1700 level, is a buying opportunity in the stock for a short to medium term basis. One can keep stop loss of 1650. So until unless stocks trades above 1650 level, stock will likely to behave in the bullish manner for near term as well as for the short term basis.
Watch out for 1650 on a Yes Bank before it proceeds any further. Incidentally, tech stocks are coming under heavy pressure right now. So pull up a Tech Mahindra. That's the top loser on the street, 3.5% down in trade right now. TCS down about 2.5%. So is an Infosys and also an HCL Tech. Pull up that one as well. It's down about 0.5%. They have maintained their guidance for FY18, and by all accounts, it's been a stable quarter for them. Ahead of earnings, ITC also at the lows of the day. So let's first talk about HCL Tech, and then we will talk about ITC. Hear out what the management of HCL Tech had to say a little earlier in the day as far as the outlook for the tech major is concerned going forward from here.
Shift towards, I would call, smaller deals. Okay, that is shorter tenures. That's one. It's basically in the mode 1 side. In the mode 2 side, I think the people are making it. Earlier, there used to be like proof of concept, now becoming projects. So you execute one, and then the customer will be able to execute the other one. So digital is coming at a scale. IoT is coming like now moving into from a proof of concept perspective, or how the data will be handled, etc., to running more of operating IoT operations per se. So we signed one deal on the IoT operations side. So I think there is a progress happening so far as mode 2 and mode 3 services are concerned.
Right. So that's HCL Tech for you. Rajesh Gupta, how have you seen the tech earnings so far? So all big four, or rather Tech Mahindra, I'm not sure if they've posted the numbers, but the other majors have already gone ahead and posted numbers. What have you made of the tech earnings so far? What's the kind of indication that it's thrown up as far as future outlook for the space is concerned?
So in the entire IT pack, I think our topic is Infosys, and we believe that even at the current level, stock looks good. So we have target price 1,200 from the current price level. So the today's correction primarily driven by the depreciation of the rupee against the dollar. So rupee has gone up to 64 level, 63 and a half level approximately. So I think rupee appreciation has led to fall in today's trade. But I think if you talk about the entire IT pack, then we are more bullish in the large cap than I would say small cap. So I think we prefer Infosys. That's our topic in the entire IT pack.
Right. Let me also ask Rajesh Palviya. Rajesh, what are you doing with the tech stocks at the moment? So suddenly they've turned tide and they're falling in trade. Would you recommend going short right now?
Yeah, Tech Mahindra is looking weak on the near-term chart, and if it continues to trade below 380 level, one can remain short in the stock. And lower side 372 is the first level. If it's break 372, then we may see further more cut in the Tech Mahindra in the near term. And lower side it can move towards 365 or 360 level. So 380, 82, one can keep stop loss to go short in the Tech Mahindra at the current level.
Right, maybe a good idea to go short on Tech Mahindra at the moment, 3.5% down coming in on that counter. All right, let's talk about ITC then, watching out for those earnings in a short while from now. Before we ask our experts what they feel about the stock, let's get in Shell to talk about ITC. Cigarette volumes may decline by about 2 to 3%. That's what the street is expecting, Shell. But what do you have for us?
There's a lot of news flow as far as the extra cess is concerned, the GST impact in the run-up to the GST. Quite a few factors, and it'll be interesting to see what kind of volume growth the company really puts out. Let's take a look at the major numbers. The company's sales are expected to be down by almost 14.5%. Profits, on the other hand, are seen up by 8.7%, and margins also expected to increase by almost 640 basis points. It's a big increase being expected. Cigarette volumes are expected to decline by 2 to 3% in this quarter. Last 4-5 quarters, if you look at them, at least 3 or 4 quarters, if you look at them, we have seen that the major decline in volume that we used to see had pretty much stalled, and it was coming back to slightly positive or at least flattish kind of volume growth. It'll be interesting to see what kind of volume growth numbers really come through in this quarter. Besides that, if you look at the hotels business, it's expected to register a flattish kind of a growth impacted by the highway liquor ban. Subdued demand is expected in the paper business and also the agri business. If you look at ITC, it should gain from the taxation kind of the news which has come through as far as GST is concerned. So any kind of commentary from the management as far as the new cigarette, the additional cess on cigarettes is concerned, how that is expected to impact volumes will also be quite important. Anything that they say in the trends as far as cigarette volumes go and the demand outlook for the FMCG categories, that will also be quite important and watched out for.
Right, Shell, thanks for getting us that update. The stock, though, near the lows of the day right now, down about 2% in trade. Rajesh Gupta, ITC, what are we watching out for? As far as FMCG goes, HUL posted a steady set of numbers. Volume growth was flat, but by all accounts, everything else came in largely better than what Street was estimating. ITC, as far as the core business goes and all the noise around GST off late and the additional cess, how do you see ITC shaping up for the future?
So definitely, I think with the GST implementation and the clarity on tobacco, I think there could be some impact on the volume in the near term. But I think the company is well diversified its business mainly into consumer side, and that area is looking very good. I think with a good monsoon, I think there are multiple triggers going to drive the overall the consumer demand. So I think at the one end we might see some kind of slowdown in the volume in the near term, but I think that should not be a very for long-term investors, that should not be a very concern for the investors. But I think we also have to look at the consumer business as well. So I think overall, for a long-term investor, I think this news flow should not be taken too seriously for long-term investors. I think ITC one can remain invested for near term. And if you talk about the overall consumer pack, then we believe that some of the AC company like Voltas, that we find it looking very good. Havels is also one company that we like at this point of time. Some of the agri-consumer companies, for example, agrochemical company, for example, PI Industries, Dhanuka, that we also believe with the good monsoon, I think these volume for these products are also likely to go up.
Right. Rajesh, Palviya, what about ITC? What do you recommend on the charts for this one?
In the recent past, we have seen a very sharp cut in the ITC, and now stock is trading at around 288 level. So if any weakness comes on the stock, so 275 is the first level where stock may get some sort of buying interest, and followed by 265. So 275 and 265 is the very important level for ITC to hold the strength on the longer term time frame chart, because if we look at the longer term time frame, the 265 270 was the breakout area for the longer term time frame on the ITC. So if any weakness come in the stock post result, one could wait for you 270 265 level, where again support buying action will come in the stock, and where one can buy the stock for again pullback action towards 300 or 320 on the higher side. So 275 and 265 are the important level to watch for post result of ITC.
All right, just about 5 minutes to go before we wind down today's trade. Tata Coffee also posting numbers a while back, and that stock has fallen by about 3.5%. Profit is down about 24% on a YY basis, coming in at 34.5 crores versus 45.6 crores. Income is also going down. It's gone down by about 13.5%, coming in at 372 crores versus 432 crores. And that's why you are seeing some bit of pressure coming on the stock of Tata Coffee, down about 3.5%, almost 3% now in trade. So that's the other one to keep an eye out for. Couple of other earnings also that came in are dominating the market action as far as we go, but clearly moving towards the lows of the day as far as the benchmark indices are concerned. Some pain coming in ahead of the July series expiry, so a bout of volatility really right now. Down about 85 odd points from the highs of the day on the Nifty. The Sensex also seeing some pain as we speak, but nonetheless holding at about 10,000 right now. Let's see if we can in fact expire above that in the next 5 minutes. Suzlon Energy, pull up this one because this has seen a sharp spike in the last few minutes of trade, so we'll keep a close eye on this one. It's gone up by about 6% right now. Guru Finance up about 4.5%, Lakshmi Machine Works, IGL, Religare, Voltas that Rajesh was just talking about. All of these stocks are doing well in trade. Another one to focus on, Bharat Financial Inclusion. This one has had a good run. Earnings have been strong for this one. Brokerages are betting big. Provisions have gone down. Asset quality continues to improve. And also picking up reports that collections and disbursements for the quarter have been better than what the street was estimating. And that's why the stock is being rewarded in trade right now, up about 3.5%. Credit Suisse coming out with a bullish note. They've hiked their target price to 920 on the counter with an outperform rating. Improvement in collections and exit collections for July at 99.5%. Total loss to portfolio from demonetization can now be pegged below 5%. That's another important trigger. They've increased their earnings estimate on the stock on this company by about 4 to 5%. So that is another one to look for, and they expect about 2,500 crores of additional provisioning, but this will be spread over the next 2 to 3 quarters. So no immediate concerns coming in at the moment, at least. Let's hear out what the management of Bharat Financial Inclusion had to say on the road ahead for the company.
Policy has been very conservative when compared to, let's say, the RBI required or compliance required. We have provided 394 crores till June 30th out of, let's say, about 464 crores of loans which are more than 60 days overdue. So this is in line with our policy requirement. What is not provided for is about 69 crores. We do have collections against loans which have been provided. The provision that we have done is very much in line with the policy.
All right, Rajesh Palviya, this one is for you. Bharat Financial Inclusion. Credit Suisse is saying this can go up to about 920, but in the short term, where do you see the stock heading?
Yeah, stock is looking positive on the near term as well as on the short term chart, and it has given the breakout on the weekly chart in the recent past. So looking at the chart, 805 was the breakout level on the weekly chart. So I'll have my bullish view on the Bharat Finance from the current level, and I expect the stock may move towards 845 to 855 in the coming trading session. One can keep a stop loss of 805 for their short term trading position.
All right, let's get into market closing then. And you're giving up all the gains that you saw in early trade today. At one point, the Nifty was at that 10,100 mark, but now it's given up a lot from the highs of the day, closing in fact near the lows of the day, below or rather at that 10,000 mark right now. A cut of just about 0.1%, but this could be expiry date jitters as well on the Wall Street right now. Bank Nifty top form, closing out with gains of 0.9%. You have Yes Bank up 4.5% at close, HDFC Bank up 2%, IndusInd Bank, Kotak Mahindra Bank and SBI, all of them seeing smart gains. ICICI coming under pressure ahead of its numbers. Punjab National Bank, IDFC Bank, Federal Bank and Bank of Baroda also under pressure. HDFC Twins contributing smartly to the rally today. In fact, you have HDFC, the top gainer on the street with gains in excess of 5%. Remember, this stock has also hit its lifetime high, so strong going as far as an HDFC goes, followed by a Yes Bank and an HDFC Bank. Other stocks that did well in today's trading session: Z Entertainment up about 1.7% at close, Asian Paints up about 1.5%, BPCL, ACC, GAIL, Kotak Mahindra, SBI, Wipro, HCL Tech, all of them seeing some gains at close. But really, market breadth turning in favor of declines towards the end of trade, and it really was some of those IT and pharma names that came under pressure. So Dr. Reddy's reacting to its earnings, down 4% at close of trade today. Tech Mahindra, the top tech loser, down about 3%, followed by a TCS. Tata Motors and Tata Motors DVR coming under pressure, so did Infosys. Bharti Airtel losing about almost 3%. Indiabulls Housing Finance, Coal India, Sun Pharma, RIL, Bank of Baroda and Aurobindo Pharma were some of the other losers in trade. ITC too closing out with losses of about 0.6%. Broader markets seeing a sharper cut as far as the performance with benchmark goes. Emphasis, the top gainer on the BSE Mid-Cap Index, up about 4.5%. Oberoi Realty did well, as did Kansai Nerolac, Gillette, Crompton Greaves and Colgate. Claris Life Sciences is going to get a part of its money with the deal coming in the next few days. So that stock ran up quite smartly as far as some of the small cap names goes. TN Newsprint was up about 13.5%. Suzlon Energy was up about 5% as well. Tata Elxsi reacting positively to its earnings, closing out with gains of about 4%. Triveni Turbines, Religare, Sonata Software, Dish TV and Just Dial, some of the other gainers that we've had in trade today. The weaker names from the broader market: Sudarshan Chemicals down about 5%, HCL Infosystems reacting negatively to its earnings, down about 5%, Infibeam lost about 5%, Unitech, Punj Lloyd, JBF India, Sri Renuka, Ratan India, Bhushan Steel, IDBI and HFCL were some of the other losers that we've had in today's trading session. So all in all, it's been an extremely strong July series for the markets. You had a close come in above 10,000 marks, so the bulls will clearly take solace from that one. And you had the markets that have scaled lifetime highs for several sessions. In fact, the last 1,000 point rally from 9,000 to 10,000 coming in just 92 trading sessions, just about time period of 3 odd months over there. Rajesh, Palviya, 10,000 is scaled. It's been an extremely strong run for the markets in the July series. How are we setting up over the next 1 month? What are some of the rollover activity that we've seen? What are the technical indicators indicating as far as the chart movement on the Nifty goes in the August series?
For August series, we expect in the first half of the August series, we may test the level of 10,200 to 10,400 in the first half of the August series, because the momentum of the Nifty which we have seen in the July series was extremely well, and there was no opportunity was there for any kind of short cover for bears in July series. So market has not given any kind of opportunity to the bears to cover their short position, and that is why we have seen market has given the close about 10,000 level. And if we look at the July series, so most of the call writing was taken place at the 10,000 strike price. So this is this move we have seen because of short covering action in the call writers. So looking at the data as well as the chart pattern, the chart patterns are still on the bullish territory. There is no as such weakness on any time frame. And looking at the chart pattern, we expect that Nifty will continue its uptrend, and on the higher side 10,200, 10,400 level can be seen in the first half of the August series. Then some sort of profit booking we can expect from those level, because 10,400 is a level which is suggesting on the upsloping channel is acting as a resistance at 10,400 level on the weekly chart. So we expect some sort of profit booking will come around those level.
Some kind of profit booking would come at those levels. Rajesh Gupta, before I let you go, any other ideas that you want to share with us? Any value buys that you're seeing in the markets at 10,000 right now?
Yeah, so if you look at the recent rally in the market, I think mid-cap has not participated so far. I mean, in last 1 month or so, if you look at the mid-cap has underperformed the large cap. So I think some of the company in the housing finance segment, for example, Repco Home Finance, I think that's one stock that we like at this point of time. I think valuation is not very high. At the same time, the base of their loan book is not very, high. So I think the growth possibility of 30% plus in the near term is not ruled out. So one can look at buying Repco Home Finance for medium to long term. At the same time, we also believe that some of the cement company which is going to declare their Q1 number. So I think the likes of Heidelberg Cement, I think that's one company which is mainly focused in central India and the northern part of the country. I think there could be strong volume growth for most of the cement companies. So I think Heidelberg Cement, looking at the kind of valuation the company is trading at less than 20 times on FY19 number. So I think these two stock, that is Repco Home Finance and the Heidelberg Cement, can be in the mid cap side, can be looked at for a long term purpose.
Fair point. I'd like to thank Rajesh Palviya and Rajesh Gupta for joining us on this leg of the trading day, closing out the July series on a strong note, holding above 10,000. It's been a gain of 5% for the markets in this series. I believe it's the best series gain that you've had on the Nifty in the last 2 years, but I'll have to verify that for you. But nonetheless, it's been extremely strong. Closing out today's session absolutely flat, but nonetheless, it's been a very strong run for the markets that saw the Nifty heading towards 10,100 and the Bank Nifty crossing that 25,000 mark. We'll have to wait and see if follow-on buying does continue on the Nifty or not at the start of August series tomorrow. But nonetheless, looking at the kind of moves that you've had today, maybe some bit of volatility cannot be ruled out heading into the weekend as well. But on that note, completely out of time on this edition of the Trading Day. Thank you so much for watching.